Hello, everybody. Thank you for attending and joining today. We're going to give you a few minutes just to log in and kind of get set and ready to go. When you're logging in, you'll see I just sent a link, some links in the chat. So essentially, you can open the chat. You'll see there's two different links in there. So first off, there's a document in there that will provide access for notes. So basically, if you have been attending these sessions for the last little while, you'll know that at the beginning of the session, we send out some notes so that you can essentially take notes alongside the slides that are relevant and keep them all basically together so that over time through these sessions you'll have a bit of a playbook around your trust accounting and how you handle trust accounting within the short-term rental space. And so if you haven't, I mean, all the previous sessions are all on our YouTube, so you can always go back and look through those. But essentially, if you have, there's a lot of people that have been attending these sessions over and over again, and those notes are something that you can build into a playbook because each session that we've done, we provide the notes and you can go through and add your own notes and kind of talk through them. Vishal is on the call today as well. We're going to go through some introductions, but Vishal is from Host Allies and he's controlling the slides. And so thanks for switching over to that one, Vishal. Before we dive into this, though, too much, I wanted to just kind of kick things back. We kind of go through this on each session, just what we're doing and why we're doing it. If you've been following along for the last little while, we have been doing multiple sessions around the topic of trust accounting. It started with an overall kind of trust accounting session, and then we dove deeper into each of the different elements or sections of trust accounting, from revenue recognition to expense management. Today, we're talking more about that tie between your trust and operations accounting through our connection with QuickBooks Online and the connections with the PMSs and the other tech stack elements that you have. And so, really, the goal of all this is to educate folks on trust accounting because it is a very complex topic, and a lot of people that get into the short-term rental space learn eventually that they want to navigate towards trust accounting because it gives them a little bit more control over the funds. And it's, there's a wide variety of benefits of doing trust accounting for your owners as well. But essentially, we want to make sure that the people have access to educational resources around this. So we bring in various different individuals from our service partnerships to talk about their experiences and how they've handled trust accounting in the short-term rental space. Hopefully, this empowers you. Basically, we want to be able to empower you to do more with your time. So by being able to, educate you on the topics, we can empower you to do more and really elevate your operations so that at the end of the, end of the year, end of the month, when you're doing your financial operational aspects, you're able to handle these either, on your own or with a dedicated professional, if you're working with service providers like Vishal. And so definitely excited to have you here. We'll continue on to that next slide, Vishal.
Sure.
And yeah, so just kind of on note, these are the last three sessions in this series. I mean, of course, we're going to continue to do stuff afterwards. We've gone through many other sessions, but upcoming sessions still on the topics would be diving deeper into financial statements and reporting within clearing, tax considerations. Of course, this is something people are starting to think about. And then in December, we'll probably go over just like a complete overview again to ensure that everything ties together and maybe get some clients involved in that one as well. If you haven't been on these sessions before, somebody just asked the question, where do you see the sessions? You can go to YouTube. We have a YouTube channel. All the sessions are there. There is a question and answer section in the system. So feel free to ask questions through that question and answer section, and we'll address as many of those as we can as we get to the end of the call. So I've seen a couple come in already through the chat. Both are okay, but definitely the questions are better tracked through the question and answer section specifically built for answering your questions. Again, here, YouTube, Get Clearing or at Get Clearing is where all of our previous webinars are. And in that link that I sent as well, there's a link there for questions you have about these upcoming topics. So if there's specific questions you have about these topics, feel free to write them in that link and we'll make sure that we review them. We want to make sure that what we're providing for content is based off of what people are wanting to learn more about. And that's the best way to be able to get that feedback into our hands. On to the next slide there. I'm going to launch a poll. So there's 5 questions. It's pretty simple, but basically launching this poll just to, again, everything we do is, trying to be able to provide more benefit to our clients. And so basically you providing answers to this poll is giving us the insights we need to make these topics and these webinars better for you in the future. So absolutely really appreciate if you go through and actually answer some of these questions. It will help us with, guiding the future development of these sessions. On to the next slide. All right, so now we're going to dive into it. So basically, before we kick things off, I just wanted to introduce everybody on the call. Many folks in here, if you're a client of ours, you probably have spoken to me before. I'm Corey. I lead the growth here at Clearing. We've grown very, very quickly, and we are continuously evolving. As you see in the product, there's features being launched, every other day. So with that, definitely just a note to reach out and kind of look in the app through the review section to make sure you're keeping up with all the new features. But yeah, my background has been in mechanical engineering and computer science. I actually navigated into short-term rentals through a property management software that used to work with. And once I kind of exited that company, I decided that I wanted to focus more on the financial aspects because I noticed there was a really big gap here. Met the founder of the company and joined him since before we've been going to the market. And so definitely have been in the industry for quite some time now and have a lot of experience with short-term rentals. And anything I can take from what I've learned and give back to property managers is something that I really want to be able to do. So that's me in a nutshell. I'll hand it over to Vishal so that he can give himself an introduction and talk about a little bit about Host Allies as well.
Uh, you want to cover this slide and I'll
Yep.
jump into mine.
Just go back for a second and just introduce yourself first before we dive into the content.
Sure, sure. Thank you, Corey. For everyone, my name is Vishal. I've actually been in the short-term rental property management space for the last 1 decade as an investor, as a property manager, and finally as a service provider, Host Allies. I've learned a lot of the things that I know the hard way, right? Actually living the life of a property manager or a property owner, an investor. And so some of the things that we're going to talk about here are just going to be things that I've learned doing things the hard way and figuring it out. And I'm excited to share those with you and also share with the work that we are doing with our existing clients, but also learn from you through the question and answer sessions and the conversation that we have after that. So excited and looking forward to this session.
Awesome. All right, so switch out to the next slide. I'm just giving basically a background and overview around what we're going to talk about today. Really, the focus today is, building that accounting tech stack that's built for scale so that you're able to do things right and get the balance right between what is trust and what is operations and why it's so important to have, different separate concerns amongst your books because really at the end of the day, that commingling can be a big issue for when you're trying to do your accounting. And so some of the challenges that I've learned over the last 3 years of, dealing specifically with trust accounting in the short-term rental space is that a lot of folks have a lot of blurred lines between the trust and corporate funds. Like what is supposed to be tied, on our trust side of things, property level side of things, and what's related more to the business. And once you start keeping these all together and mixing them up within one bank account, it creates a lot of risk and a lot of confusion in your actual process. So we want to make sure that we address this today and talk a little bit about why it's so important. A lot of people also have a lot of all-in-one reliance, but the reality is that with a PMS or a single tool, often the accounting falls short because it's not the only thing they're focusing on. And so if you have unique requirements or if you do things in a specific way, it can be a really, cumbersome process to try to do this in a PMS. Plus, if you ever decided, hey, I want to move to a different PMS or add a different payment processor or whatever, you lose a lot of that accounting aspect if you leave that system. So having your stuff separated in its own system allows you real freedom to be able to move between whatever you want to do from a tech stack perspective. Messy integrations and duplicate data. I think everyone's probably experienced this before, whether an integration doesn't work well or if it's, you're finding duplications in some of the transactions that are happening on your books. Really important. Not catching these or not dealing with them in an efficient way waste times. It obviously reduces accuracy and it can erode confidence if, frequently you're getting these passed over to an owner and not catching them. There's a lack of clear reporting a lot of the times because if you're not dealing with bank connections and you're not reconciling properly, you do run the risk of getting your data wrong, which, if you have wrong data and then you're making adjustments, you're going to lose that confidence from your owners as well. Oftentimes, if you're working in just a trust system or an accounting system that's specifically for a generic accounting, you struggle to really see that full picture. And scaling without structure just in general doesn't work. I mean, at the end of the day, if you want to create a scalable business that's going to grow to many, many properties, what works at 5 properties can definitely break at 50. And so you need something that's repeatable and scalable to be able to take you to that next level. We'll jump to the next slide and then I'll kind of wrap things up and pass it over to Vishal specifically to take over because we want to give the most amount of time to the experts that, have graciously joined us to help us with these sessions. And so that's kind of the rest of it will kind of be him taking over. But really just wanted to provide a very brief outline. What we're going to be doing is we're going to be talking about understanding how to build a clear framework, keep those things separate but aligned, how to integrate them together, make sure that trust and corporate financials are handled at scale, and really understanding which accounts, transactions, and workflow belong in which system. Gain clarity, compliance, and control. You really want to ensure your trust funds remain protected and not at ready at any given time. You never know when that's going to happen, and it's something that reduces risk if you're keeping up with it. You don't want to, you obviously want to reduce errors and, duplications through better integrations. So handling things in the right spot is going to help with that quite a bit. Strengthen financial transparency for owners, management, managers, and accountants. Make sure everyone understands and is working off the same data, and just make sure that everyone's getting a clear picture of what's going on. And then ultimately, with trust accounting, it's really a way to optimize yourself for growth. So leverage that automation to save time, reduce the manual work, and hopefully you can, if it's part of what you want to do, you can scale from that handful of properties to a large portfolio without breaking your structure. We have clients all over the spectrum of how many people properties they have from, 1 to 2 to hundreds of properties. And so, we know that our software can scale with you, and we want to make sure that you understand how that can happen. So I will pass things over now to Vishal, who will take it away.
Thanks a lot, Corey. Um, so I wanted to start with a quick introduction of my firm, Host Allies, and actually the philosophy behind our genesis. Over the last decade, like I had mentioned earlier, I've been closely involved in the short-term rental property management space in various capacities. Earlier on as an investor managing my own portfolio, and then eventually as a property manager managing properties for others. In these roles, I've gained first-hand knowledge of the challenges property managers face in managing their accounts and finance while they are trying to simultaneously grow their business. There are two primary reasons for this. First of all, property managers, like most of you know, have very important things to focus on, such as taking care of guests, managing the health of the properties itself, the maintenance, acquiring new clients, and growing their inventory. With all that going on, there's not enough hours in the day to focus on back office tasks like bookkeeping and managing finances. Secondly, back office accounting and financial management can be really complex and time consuming, and it does require specialized skills and training. And that's the reason, based on my experience, I built Host Allies. And the goal was here to help property managers manage their back office better so they can focus on their front office. This way, our clients can grow their business and we provide them the support, the tools, the reporting, and the guidance to ensure they're doing it in the most profitable manner. We go beyond bookkeeping. We help managers set up scalable accounting processes. We help them manage owner statements. We help them manage financial statements, trust account reconciliation, tax payments, and streamline everything from onboarding to financial reporting. We currently serve multiple boutique short-term rental companies with 10 to 150 properties and also select larger franchises. We have experience serving clients across a majority of the PMS platforms, and we've been a very close partner with Clearing, and we've been able to grow with them. So in today's webinar, we'll share some of those best practices that we've learned and applied using Clearing and QuickBooks. With that, let's move to the next slide. And here we're going to start talking about giving you an overview of short-term rental accounting practices. So let's get into it. What is short-term rental accounting all about? There are two interrelated but distinct accounting streams in property management: financial accounting and trust accounting. Financial accounting or operational accounting answers the question, how profitable is my management company? Are my costs going up or going down? This covers the business money, the income from fees and commissions, to all your expenses, taxes, and operational reports. Trust accounting, on the other hand, is about stewardship. It's about managing money held on the behalf of owners, guests, and other stakeholders. It means carefully tracking funds, staying transparent, maintaining compliance, and generating frequent owner statements. Trust accounts are regulated, reconciled often, and any mistakes can impact your credibility. So, for anybody who's new to the industry on this call or who's recently joined property management business, it's crucial not to blur these lines. And this is also true for experienced property managers to make sure you keep these both top of mind. Both these practices support a healthy business growth, reputation, and legal standing. Think of this one slide as your accounting map. Keep these parallel systems strong to build your business on a rock solid foundation. So let's talk a little bit about this balancing act. Balancing trust and financial accounting. It feels like walking a tightrope, but it's essential. These practices are inherently different from each other. On one hand, trust accounting handles money that's not yours. It's owner funds, guest deposits, vendor payments, tax collections. Financial accounting is handling money that's yours, your income, your expenses belonging to your property management company. So that's one inherent difference. The other inherent difference is, as part of trust accounting, you're building different kind of reports, building different kind of outcomes. You're dealing with owner statements. You're dealing with trust fund audits. Whereas in financial accounting, on a monthly basis, you're dealing with your own P&L, your own profit and loss statement, your own balance sheet for your company, and your tax filings. And finally, the tools that you use for trust accounting, which are purpose built for trust accounting, like clearing, right, are different from the tools that you use for delivering your financial accounting, QuickBooks. So you can see that these are very different and they're distinct. But even though trust accounting and financial accounting are each distinct domains in property management, they're deeply interlinked in practice. For example, the revenue data to create your monthly financial statement or your P&L has to come from your trust accounting process, right? In the same way, sometimes if you're creating an owner statement as part of trust accounting, the expense data will originate in QuickBooks, which is coming from your company financials. So you can see that that's why managing these processes in an integrated manner is essential, even though the ledgers are separate. When data from your trust accounting is routed into your financial workflows seamlessly, you can eliminate double entry, you can prevent errors, and make the auditing process straightforward. The real value comes when both these systems talk to each other. The trust transactions inform the owner statements, which update your financial ledgers, helping you deliver complete, accurate reports to owners, the regulators, and your leadership team, right? So this is the way to manage the balancing act of dealing with these two diverse work streams and accounting practices. So let's talk about, now that we've talked about how the importance of this, right? Let's talk about why is it so critical and vital for you to get these both correct. So I will talk about three major points. First of all, segregation of funds. By doing the segregation of funds correctly, it ensures that you are meeting your fiduciary duty and it protects you against legal violations. Second, by maintaining compliance and accuracy, it gives you a better control and real view into your financial health. Your owners see transparency, the regulators see that you're adhering to the rules, and you get to see a clear picture of your growth and your financials. And finally, thirdly, this discipline is really, really important because it impacts your valuation. When you're trying to sell your business, if you've made it into a big, large property management, you want to exit, or you're trying to raise funds, it's very important to have a clean set of books. So that's why this is so important. A manager who can confidently show compliance and performance becomes indispensable to the owners as well as to the investors. Let me shift a little bit to, this is Halloween time, so it's a great time to talk about horror stories. So let me dive into what can happen if you don't manage your trust accounts and operating accounts in the proper manner. So company ABC is an example. They were not practicing true trust accounting. They were only using one bank account for both their operating and trust accounting purposes. And that really worked fine when they were like 5 units, right? But as they grew, it became really hard to keep track of things. What ended up happening is they were collecting advance deposits for future bookings, and they ended up spending a lot of that money to cover their current expenses. As a result, when the time came to pay their owners, they didn't have the money. Owners eventually did get paid months later, but the company had to take on a loan to true up with their owners and to save their business from bankruptcy. Now, these stories aren't rare. Managers who skip the proper accounting process, they end up spending a lot more time cleaning up their mistakes than growing their business or serving their guests. So to protect yourself and your business, please dedicate the time and the energy to get your accounting practices set up right. And that's the big message from this particular slide. So let me now pivot to, if now that we've established how important this is, let's try to understand the challenges that property managers face in getting this right. We see three pervasive challenges in STR accounting. The big challenge number one is the revenue recognition challenge. Challenge number two is expense management challenge. And the third challenge is asset and managing your asset and liabilities correctly. In the next few slides, we will deep dive into each of these challenges in detail, talk about what causes them, and share with you some best practices we've established in working with Clearing and QuickBooks together to address these in your trust accounting and your financial accounting process. So now that we've introduced this, let's get into the first challenge of revenue recognition. Let's talk about one of the most common and the most painful challenges in short-term rental accounting, right? When money comes in from bookings, it seems simple at first, right? But once you dig deeper, the questions start piling up. The questions that we are seeing this, our friend here asking them himself, right? So property managers often find themselves asking, right? How do I actually accurately split my bookings between myself and the property owners, right? What are all the puts and takes? Are my bookings showing up correctly on my owner statements? If I get a booking that doesn't match with the payment, how do I reconcile? And how do I reconcile not only one booking, but the multiple bookings that I'm getting in a month across multiple channels with all those nuances and resolution payouts and resolution adjustments and A, B, and C, right? At the end of the day, what is also important is how much did I actually earn this month? And how do I reflect it on my own financials in an accurate way? So 3 months later, I can create a quarterly P&L or a balance sheet, right? Each of these questions look small on their own, but together they represent the bigger challenge of revenue recognition. And if you don't have a system in place, you risk errors, wasted hours, and worst of all, losing owner trust. The challenge comes down to three things: timing. Payments and bookings rarely line up perfectly. Guests may cancel, they may rebook, or they pay with a different platform, and you have to trace all of this down. Accuracy. Every owner expects the statement to be right, down to the penny. And if it's not, it creates conflict and damages relationships. And finally, reconciliation. Without automation, you're left manually comparing statements, payouts, reports, which is not sustainable as you scale. And if you have a lot of units to manage and a lot of bookings to reconcile in both your financial and your trust account, right? So where do we go with that? And what's the answer here? So wanted to talk about the integrated revenue solution. Revenue recognition may feel overwhelming, but with the right tools, it becomes a strength instead of a stress point. By using the right accounting tech stack, you can do the following. You can automate revenue splits between you and the owners. You can sync bookings with actual payments in real time. You can generate pretty accurate owner statements that reflect the revenue, the tax, the commissions, and you can automate the journal entries from your trust accounting into your financial accounting to capture your income in a seamless manner. This allows you to free up some time so you are not stuck reconciling late at night. And in this example that you see, it's like a guestee flow guesty data that's flowing into clearing and that's flowing into QuickBooks, right? This integration itself, this data sync process allows you uh, to unlock powerful automation. Every booking detail, from the rate to the cleaning fee, gets automatically split into the allocations for owners, tax, and vendors, and those rules are already set up in advance in clearing. This reduces human error, it improves reporting speed, and lets you easily trace the transactions from the booking all the way through the payout. In practice, manager income, owner distributions, and expense allocation all flow through journal entries, providing accuracy and real-time financial visibility. So let's talk about, if you already set up an integrated approach like I talked about in the prior slide using Clearing, QuickBooks, and your PMS, you've already solved about 70 to 80% of the problem. The rest of the problem can be solved by implementing with some of these best practices, right? So the first best practice is about revenue ledger mapping. You need to be very careful about making sure that your chart of accounts in QuickBooks and all the ledgers related to revenue in QuickBooks are exactly matched up correctly with clearing. And also the expenses that in QuickBooks that may be pushed into clearing for reimbursables, you have to make sure those are matched up correctly. The second thing you need to do is data alignment. You need to be able to match all the bookings and the fees and the payout data in clearing with the revenue entries in QuickBooks, at least in the first couple of months, to make sure you understand if there are gaps, why there's a gaps. And that's what is called variance detection. Identifying any timing or categorization mismatches is absolutely critical. And by testing these routines on a regular basis, you can catch mistakes early, avoiding underpayments or overpayments, and you can build a reputation for financial discipline with your clients with a solid revenue recognition system and best practice. So with that, I want to jump into the next challenge. Let's shift from revenue to the other side of the equation, expenses. Managing expenses in short-term rental trust accounting is just as critical as revenue recognition and just as complex. In fact, expense management is where a lot of the property managers lose control of their numbers. Think about the daily questions that come up, right, about expenses. Is this an overhead, or is this tied to a specific property, this particular expense? Where did the expense occur? Did it happen through an invoice or through a credit card process? Did I charge that expense to the right property and the owner? Where's the receipt? And how should I code the receipts for all these expenses that I'm getting? Which statement should it belong to? Should it be on my company's P&L, or should it be on an owner statement, each expense? How can I report on all my expenses? How do I get clarity on my spend management, right? How do I get, and ultimately, how do I control it? If you feel that your expenses are out of control, what processes do you have to put in place to bring them back into control? Now, each of these questions may seem small, but together they create confusion. And without a system, small mistakes can snowball into big problems. The challenge here is threefold. The first is a classification challenge. Every expense needs to be correctly coded as business overhead or property related. If you get this wrong, the statements, the tax records all become unreliable. The second challenge is of documentation. So missing receipts or unclear paper trails both put compliance and owner trust at risk. And finally, control. Without good visibility, expenses can creep up and creep in unchecked. Sometimes you only notice a leak when it's already a flood. So expense management is not just about bookkeeping. It's about operational discipline and maintaining credibility with owners. That's the expense management challenge. So let's talk about what do we do about this. With the right tech stack, expense management becomes manageable. In short, when you bring order to expense management, you don't just save headaches, you create transparency and you create trust that the owners value most. Just like with revenue, integrations can handle the heavy lifting in expense management. But you have to sync certain tools like your task management tools, your expense management systems to Clearing and to QuickBooks, and you have to set up the rules to automate the categorization and the approval processes through these systems, right? Let's discuss the expense management system. Here I'm using RAMP as an example. This is a tool that helps you capture receipts, code expenses, and control spending. Instead of chasing invoices or wondering which statement belongs to which system automatically the system routes and categorizes expenses for you. When RAMP is integrated to QuickBooks and Clearing, every dollar has a trail from the moment it's spent to the moment it's reconciled. That's what eliminates the pain points we saw on the last slide. Let's now talk a little bit about your task management system. So, and I'm using here Breezeway as an example, right? For many managers, expenses don't start with accounting. They start with a work order. A guest calls about a broken appliance or a property needs preventative maintenance. By integrating your task management with your accounting system, every expense is tied back to an original job. Breezeway integrates with Clearing, allowing you to import paid Breezeway tasks into Clearing to create reimbursable expenses. That means you know why money was spent, which property it was belonging to, and you can hold your vendors accountable. So no more guessing whether a charge is an overhead or a property related, it's baked into your workflow. So I'm just giving you some examples here about how, and if you bring these expenses into Clearing and QuickBooks, you get a clear, clean, transparent record for every line item. Both your team and your owners get real-time visibility into expenses, helping everyone make smarter financial decisions. The most successful managers use software not simply to record as record-keeping tools, but as process enablers, freeing time for higher value activities and reducing the risk of errors. So this is an example of some of the ways by which you can come up with an integrated approach to expense management that can save you time and effort. Still want to talk about best practices, right? Because the tools are one thing, but if you don't have the best practices and the rules set up correctly, things will not work as greatly as you plan. So we're going to cover 3 best practices that will help you stay compliant, transparent, and in control. They are expense capture, cross-check, and control. So let's start with expense capture. Capturing expenses sounds simple, right? Log a bill, pay the bill, but in practice, this is where many property managers get into trouble. The biggest issue is not being able to separate clearly what are property level expenses and what are operating expenses. Property level expenses are things like repairs, utilities, maintenance, housekeeping. These belong to the entity, the trust entity, because they're incurred on behalf of the owners, right? On the other hand, salaries and wages, payroll, marketing, office rent, technology subscriptions, these belong to your management company and should never flow in through the trust accounts, right? So this is very important. When these 2 categories are mixed, owners get charged for business overhead and your books stop reflecting reality. So the best practices for capture include one of them being having dedicated systems for each type of expense. Use your trust accounting system like Clearing to capture your property level expenses and those transactions, and use your QuickBooks or your financial accounting software for your management company's expenses. Now, there are cases that sometimes property managers are using their operating account to pay all the property level expenses. So they will naturally do come into QuickBooks. But if they do come into QuickBooks, you should mark them as reimbursable and push them into Clearing through the QuickBooks Clearing integration. And only the reimbursable expenses should be pushed into Clearing and not the management company's expenses. So this is a way by which you can clearly create separation on which expenses are going to which system. Second best practice, attach within that on expense capture, attach the receipts and documents immediately. Every vendor invoice, utility bill, or maintenance charge should be logged with a digital receipt attached. This makes the audit and owner questions easy to resolve. And finally, code the expenses properly at the point of entry. Don't wait till the end of the month. Code the repairs when the repairs happen. Code the utilities as they happen, and train your team. Anyone processing bills, it doesn't have to be your accountant, anyone processing bills can use some of these tools to do the coding. And by the way, the coding can also be done through rules that auto categorize, right? So when you have done this right, expense capture means you know where the money belongs and you don't have to backtrack later. The next best practice is cross-check. Even if you've captured everything, mistakes can still creep in. Double counting is common. For example, a vendor invoice in clearing and then again in QuickBooks. The opposite also happens when a bill gets paid but it never shows up in your trust ledger, leaving gaps. Cross-checking is a discipline of validating that the expenses are consistent across all the systems. There are a few different ways to do this. A monthly reconciliation is always a great way. You run an expense report from your trust accounting system, run one from your financial accounting system, and double check all the expenses. While you're doing that, you can also use some exception reporting. Many like the systems we're talking about allow you to run exceptions or uncategorized transaction reports. These highlight anything that slipped through the cracks and was not properly coded. Another thing is to spot check. You can make it a habit to pick a few vendors each month, say your cleaning company or your landscaping provider, and make sure that every invoice is accounted for in both the trust and the operating books, depending upon where that invoice should go, right? So the spot checking idea, if you do it consistently over the course of a year, you'll be able to spot check almost all your expenses. Check for timing differences. Sometimes the discrepancy is just timing. One system records the invoice, another one only logs after the payment clears. Document those differences so they don't get mistaken for errors. So this cross-check process is like a quality control for your accounting. It ensures your financial picture matches reality and keeps the small errors from snowballing. And finally, the last best practice, which is control, right? Once expenses are captured and cross-checked, the last piece is control. Control is about setting the rules and policies so the spend is always consistent and predictable rather than reactive. So there are two big methods of control, right? One is policy-based categorization. Every expense has to be categorized correctly and according to predefined rules, and the teams have to be trained to apply these rules at the time of the transaction. You can set up the categorization rules automatically also tied to cards. So like one card could always be for operating expenses, the other card could be tied to overhead. You could do it to your business bank accounts. Certain bank accounts I only use for overhead, some bank accounts I use for property expenses. You could tie it to users. A particular user is always dealing with maintenance, right? Or merchants based on whoever the supplier is, right? You can categorize it automatically, right? And the second aspect of this is standard approvals and vendor processes require an approval for certain categories of spend, especially if the spend is above a certain limit or it's for large repairs. Using a standard vendor onboarding process, collecting the W-9s, insurance certificates, and payment terms before the first invoices generate, automating the vendor payments wherever possible to reduce human error. So just to recap, right? We talked about an integrated system where you can take advantage of the automation, but the best practices are to capture the expenses in the right system, not the wrong system, to cross-check across the system to catch duplicates, missing items, and to control the expenses with better policies, with better approval processes, and better reporting. And if you follow these three best practices, I believe you'll build an expense management process that is clear, accurate, and scalable. That means fewer surprises, stronger reporting, and more trust with your owners. So we've just covered the second big challenge, right? Now let's quickly jump into the challenge with asset and liability management. I'm sure if you're reading this, you see the screen, some of these questions you might have asked yourself at some point of time also. And if not, that's great. But here's where the property managers often struggle the most, because it's more than just tracking income and expense. It's about making sure your trust account and your balance sheet, your trust accounts are balanced, compliant, and sustainable. Here are the kinds of questions managers ask themselves all the time. Hey, I have $100,000 in my trust account, but how much of it can I actually pay myself? And how much of it is money that I owe others? Should my booking deposits go into my trust account or into my operating account? How much is already committed funds for advance deposits within my trust account? What is my true tax liability as of today? And am I actually spending more than I've actually been making? And the big one, why does my trust account not balance? That's a very common question that property managers face. These are not minor bookkeeping details. These are the very questions that determine whether your business is compliant and financially stable. The difficulty with asset and liability management comes down to, again, three main issues. Clarity. It's not always obvious what portion of the money in your account is truly yours versus what belongs to owners of a future reservations. Compliance. Mismanaging deposits or pulling too much money from your trust account can put you into legal and regulatory risk. And visibility. Without real-time reconciliation, it's easy to lose track of advance deposits, tax obligations, and payouts, right? So if these aren't managed properly, you risk not just mistakes, but serious consequences for your business and your reputation. So that is in a nutshell the asset and liability management challenge. So what can you do about it, right? Because every challenge has a solution, right? So let's talk about asset and liability management best practices. We're going to cover three best practices that'll help you stay compliant, transparent, and in control. The first one is segregation of funds, right? The second one is separation of liabilities and monthly. The third one is monthly reconciliation. Let's talk about segregation of funds. One of the most common mistakes property managers make is commingling funds, mixing trust money with operating money. Imagine putting your owner's share of your rental income in the same account that you used to pay out of your office rent and buy supplies. Not only is that messy, but in many states it's actually against the law, right? So the first best practice around segregation of funds is to set up separate trust accounts that are strictly client or for owner funds, completely separating them from your operating bank accounts. This way, you always know what belongs to the owner versus what belongs to your company. This builds transparency, simplifies the audit, and keeps you safe from compliance risk. Think of it as building a protective wall between your client's money and your business operations, right? That protective wall is very important. And you can do it a couple of different ways. You can create an individual dedicated bank accounts. At minimum, you need one operating account for your business and one trust account for your owners. But and guest funds, but in some states, you may even need to be required to open multiple trust accounts. For example, one for security deposits and the other one for rental income. So these are, again, it's mandated by the state laws. Second thing that you can do is use your property management software or accounting system to tag every transaction to the correct account. This way, when the money comes in, there's no second guessing. It always goes, so the guest pays for a booking, it automatically gets deposited to the trust account, not the operating account. Setting up strict internal rules with your team. Your team should know trust money is never to be used on business expenses. The only transfers that should happen out of a trust account are owner disbursements, disbursements to the property management company as a fees or commissions or taxes, right? Now, if you're paying vendors out of the trust funds, that's good. You would have to manage that correctly, but you shouldn't be running your operating expenses or other kind of expenses out of your trust account. You should keep good documentation. Any transfers between trust and operating accounts should have a clear paper trail, invoices, statements, or system integrated reports. This protects you in case of an audit. Now let's talk a little bit about We just talked a lot about segregation of the funds, the banks, and let's talk about separation of liabilities. That's the next best practice, right? This is about how you represent money on your balance sheet. Your operating entity has its own obligations, things like payroll, office expenses, vendor bills. Your trust entity, on the other hand, carries owner liabilities like security deposits for owner payouts, guest refunds. If you blur these two liabilities on your financial picture quickly becomes inaccurate. The best practice is to clearly separate those liabilities on your balance sheet. That means owners can see exactly what owed to them, and you have a clean picture of your accurate financial record that stands up to scrutiny. Separation protects both you and your clients. It shows you are a steward of their funds, not blending them with your company debts and obligations. And finally, monthly reconciliation. I think I've used the word reconciliation about 100 times in this presentation, but reconciliation happens everywhere, revenue, expense. Monthly reconciliation, even if you've got separated accounts and liabilities, errors can still creep in. Maybe there's a double entry, maybe you missed an owner payout, or the timing mismatch with deposits. By doing the reconciliation, that becomes your monthly checkpoint to catch and correct for these things. So how do you do all of this? How do you do the reconciliation? I mean, there's a couple of steps. You have to pull your bank statements. You have to match transactions in your accounting system. You have to investigate discrepancies. You have to reconcile the liabilities with the balances. So this is beyond just matching the bank. You have to make sure that all of your liabilities, if you stack them up in the trust account, that needs to equal the amount that you're holding in your trust bank. Right? So this is a really critical aspect of trust account management. And finally, you need to document the process. Have a second set of eyes, possibly another team member or an accountant, review the reconciliation. This reduces the risk of fraud or oversight. So to recap, what are the best practices for asset and liability management? Segregate your funds, don't mix operating and trust accounts. Segregate your liabilities, show them clearly what belongs to the business versus belongs to the trust, and reconcile monthly. Audit your accounts to ensure accuracy. If you follow these three best practices, you'll build a rock solid foundation for financial management and reduce the risk and build trust with your owners. At the end of the day, that's what great property management is all about, protecting your clients while keeping your business healthy. I want to talk about one really important thing, which is beyond these best practices, and that is really around reporting, right? No matter how integrated a system you put together and how good you are in your day-to-day practices, only your reporting is going to guide you in terms of whether you're performing well or not, right? So understand how well your accounting is working and how your business is performing. There are a few essential reports that you should start using immediately. Some of these reports you will find in your trust accounting software like Clearing. We talk about the booking reconciliation report that automatically identifies any bookings that have not been paid out and you have to reconcile them. The allocation report that helps you accurately allocate the money that's come in between the owners, the taxes, and the management. The liability report that constantly tracks certain liabilities that you're carrying. The property level P&Ls that tells you how much profit is being made at a property level. Your spend management reports that tells you how to control your overall expenses. So these are the trust accounting reports. On the other hand, when you look at your financial accounting software, you should focus on looking at your operational P&L, which is your property management company's P&L, on a monthly basis. You should look at your balance sheet on a monthly basis because that's going to tell you what is your latest financial position. Are you owing people money or do you have equity in your business? And finally, your cash flow statement, which will tell you how much cash you're generating from your operation. So by looking at these reports, it'll be your guiding post to deliver a better accounting and a better financial controls on your business. So I want to wrap this up by saying a technology-driven, integrated trust and financial accounting can deliver you the clarity and the control you need on your finances. This clarity and control applies to the three main areas of automated revenue recognition, smart expense management, and airtight asset liability oversight. With all processes syncing transparency between Clearing and QuickBooks and your PMS, you unlock new efficiencies and avoid these accounting pitfalls. And by using the reporting we talked about in the last slide, you can clearly monitor your compliance with your trust accounting guidelines and also monitor your financial result. The outcome is less time spent on accounting issues and corrections, more time spent enhancing the guest and the owner experience, and making more money from the same business. This is how short-term rental operations scale profitably and securely. I wanted to give you leave you all with I started with a horror story. So I wanted to leave everyone with a success story. Um, so this is an example. We have lots of many wins, small wins and big wins with our clients. But this is the one that's very recent, so it comes to my mind. This client is a mid-sized property manager. We started helping them in April, right? And I've seen them make leaps of progress month after month. They've worked hand in hand with us to drive every bit of this progress. In April, they were 2 years behind on their financial accounts and taxes, right? They had literally no idea what their current financial position was, and they had glaring issues all over the place in their trust accounting and their financial accounting. So it wasn't something that there was no magic, right? Our first goal was to make sure we can help them get their 2024 books completed and their taxes filed, right? So we dealt with that. Then we jointly implemented clearing to get their owner statements accurate, right? After we did that, we then streamlined their expense management process because that was all over the place. I mean, the way the expenses were coming in and how they were dealing with it. But they worked hand in hand with us. We put in the right rules, we put in the categorization, we put in the tools. We then integrated clearing to QuickBooks. And from June onwards, all the revenue in the QuickBooks P&L was recognized in an automated way through the journal entries. And we could produce much more accurate profit and loss statements in a real time. Finally, we attacked the big balance sheet issue of their trust account reconciliation. And I'm very happy to say that in the last few months, 3 things have been accomplished. As of last week, this client can reconcile their trust bank and their liabilities with almost 100% precision. And they know exactly what their financial position is on a daily basis. That's a lot, right? Secondly, the client has over the last few months recognized that their expenses were out of control. So they put in better controls in place and budgets, and now they are making a lot more profit month over month. And finally, their monthly process to do financials has become dialed in. Owner statements go out on the 7th, the management allocation report to clearing 9th, trust reconciliation happens on the 12th, and monthly financials, P&Ls and balance sheets by the 15th. So what's the lesson here? The lesson here is within a few months, it is possible to go from an unreliable, messy financial situation to accurate and trustworthy financial statements. And it is possible to set up the process to work efficiently so that you can get your time back to grow your business. So if the path, so let me just end with one point that I wanted to bring up is that if this is intriguing to you and you feel that you want to follow this path to integrated short-term rental accounting, but it's feeling overwhelming, help is at hand. Host Allies offers personalized guidance. Whether you're optimizing the initial setup or you're automating daily workflows or looking for an end-to-end review of your system, every business is unique, and our consulting sessions are designed to find out what exactly makes your operations tick and where improvements will pay off. Don't let these accounting headaches slow you down, slow your growth. Reach out and get some expert help if you need. And I'll be looking out to talking to each of you. And with that, I'll hand off to my friend Corey, who is going to take us through the Q&A sessions.
Yeah, absolutely. Thank you very much, Michelle. That was, a lot of really great information. I think, I spent a lot of time talking to folks about this stuff prior to them getting into clearing, and the problems that you mention are quite frankly the problems that everyone mentions, and they're often, there's two main things that I always get asked about. One of them is, um, how much money should I be paying my business each month? Because I have no insights into this whatsoever. And then the other one is, people come to us and they say, I'm missing $10,000 from my trust account. Can you tell me why? And these are big impacts to a business. And I mean, I've heard of stories of people getting up to $500,000 out of balance in their trust account, having to pull out long-term line of credits to kind of get back on track. And if you're not taking care of your financials and doing it systematically in a way that scales, these problems can become reality much quicker than you think. And so, I mean, clearing, obviously, if you're in this call today, you maybe have heard a little bit about us or chatted with us already, but if not, if this is somebody that is, exploring potentially working with clearing or working with a service providing partner, how do we actually help at the end of the day? I think Vishal hit this on the head pretty well through his conversation, and so I want to make sure we save enough time for questions. But basically, we are purpose built for short-term rentals. Everything that we built and everything that we focus on is specifically right now short-term rental trust accounting and financial management in the short-term rental space, whether that's expense management or these reports that you need, and so on. So we aren't really trying to do everything like a lot of the different systems. It's actually interesting. Property management softwares in the long-term space, they focused on accounting from the ground up because they're fiduciary required to do, or there were fiduciary requirements making them, need to do trust accounting. In short-term rentals, it's slowly rolling out different states that have fiduciary requirements. And so because of that, property management software is focused on ease of use between multiple channels. They focused on management calendars, on calendar control. They focused on inbox control, and now they're bolting on different aspects of accounting to try to make it work. But it just isn't actually built from the ground up in a way that supports it. So there's a lot of reasons why the difference between long-term and short-term exists, and clearing basically solves that because we are purpose-built for short-term rentals from the ground up, instantly connecting to bank accounts and credit cards, and working from the ground up with a focus on financial management for short-term rentals. Um, I'll leave this slide up. You can read through it. I mean, in terms of other things, I just noticed time here. We're coming close. So we do track your liabilities. We handle the trust accounting to keep the funds separated. There's some good questions that are coming up that will address some of that stuff as well. And then we're ready for integration with your operations at any time and support scaling structure. Structure holds within our system as you scale. So if you do switch systems or if you do need to change some sort of, maybe your payment processor, your processing clearing does not change. You get a process that's repeatable and you can scale with independent of any other tool you ever decide to use, PMS included. With that, though, I do want to make sure that there's time for questions. So, Vishal, if you want to just go ahead to the next slide. I see a few in here already, so that's great. These are all really good questions. Just one's a clarifying question. They want to understand correctly that trust accounts, don't necessarily need to be connected to your QuickBooks Online anymore. They can be directly connected to Quick or to Clearing. And actually, quite frankly, that's almost like a best practice.
Yeah.
Connecting your trust account to Clearing, connecting your operations account to QuickBooks. If you have some expenses going through operations, there's ways you can do things differently. It's not like this is the only way you can potentially do it, but that is honestly the best practice for keeping that segmentation. I don't know, Michelle, did you want to add anything to that?
No, exactly agree. And if they are firms that are paying their expenses through your operating account through QuickBooks,
Yeah.
there's a way to connect those expenses only exclusively back into clearing through the integration.
Yeah.
But I would, in general, the rule is trust account connects to clearing, operating account connects to QuickBooks.
Yeah. Another one of the questions that came in was around the process for accounting, and it's just basically asking, is it different if you're paying out of operations for some of your expenses that are billable to a property, or if it needs to be, does that need to be handled different than if you're paying out of your trust account for certain types of expenses? And I think from my perspective, I'll let Vishal kind of take the lead on this one, but from my perspective, just definitely check in with your state because different states have different rules around how you can pay expenses. Certainly in North Carolina, for example, you can only use, I think, up to 50% of a booking's advance deposit deposit towards expenses. And if you go over that, then you run into compliance issues. So I don't know if you have anything to add there, Vishal, but certainly like different states can have different rules with this. I think in general, from a best practice perspective, and what we see most of the time is if it is a property level financial that needs to hit your owner statement, just make sure that either you do it in QuickBooks and you pass it over as a billable charge, or you pass it into clearing and then you pass it over, pass it over as a reimbursable transaction, which will be revenue coming into the business because you're getting that money back. So just make sure you have a process in place. There's different ways you can do it, but certainly make sure you have a process in place. What do you find is your best practice there, Vishal?
No, I would say that it really matters also if you're marking up the expense or not. If you're marking up an expense and you have to bring back profit into your P&L, then you would follow a process one way. But if you're not marking up those expenses and they are pure pass-throughs, then and then you would operate. So I think it's a question that is a little bit. I would provide a nuanced answer by finding out a little bit more about the specific situation. But if you need some more help, just reach out and I'll send me an email and I can spend some time with you with your specific situation.
Awesome. Perfect. So I think there's one other question. Let me just make sure here. Am I understanding correctly that the financial activity within the trust accounts and for the properties will not be pushed into QBO by clearing? So that's not necessarily the case. And I think this goes back to what Vishal just said. Like, depending on how you have things set up, depending on how you're doing markups or if you're doing markups, there's different things involved in that process, and you will create a process that is repeatable once you understand a little bit more about the expenses and how you're handling them. That being said, clearing in general is very flexible, and that's, a very important aspect because every business is different. So how you handle something compared to how somebody else handles something, could be completely different. In general, like Vishal was talking about with trust accounts, some states require just one trust account. Some states don't care if it's a checkings account. Some states will say every single owner needs its own trust account. And in these scenarios, like, you need to handle things differently, but clearing is flexible enough to kind of work with any of those scenarios. Um, Another question just came in. Do you need to do trust accounting in QuickBooks Online if you're already using clearing for trust accounting? Certainly not. Vishal, what about with you? I think you mentioned to me at one point, like, a lot of your clients don't even need classes anymore in QuickBooks. Is that still something that you're kind of,
Well, it actually depends upon how their expense process is working and the the reimbursable question. Uh,
yeah.
but to just to answer that specific question, I believe if you're using clearing, right, um, most of the trust accounting gets done in clearing. But you absolutely, when you have your own balance sheets in your P&Ls, you have to account for the trust account liabilities. That's where the integration between trust account asset and liabilities, that's where some of the data integration between clearing and QuickBooks comes handy. And we talked a little bit about that in one of the best practices. But yeah.
Great. All right. I think we're at time. We're going a little over, so I appreciate that. I know that there's a question here about if you're a PMC in one state but have properties in multiple states, does the rules for trust accounting go based off your PMC home state or the state the property is located in? Vishal, do you have an answer to that question? I know usually with these types of questions, I make sure that people contact their state committee,
Yeah.
make sure that they get the advice directly from somebody that is working in those because it is a legal requirement. And, we are software developers and accountants, and we know
Yeah,
like this. But
I would rather you do a case by case and an assessment than provide any blanket answers on these because I've seen variations of all kinds in the practice. I think this is a very new and specific case by case situation.
awesome. All right, jump to that next slide then, and we'll slowly wrap things up here. I mean, quickly. I'm sorry, we're already a little bit over, but basically just letting you know that we are still continuing this. As I said at the beginning, there's 3 more sessions. One's going to be diving into, reporting considerations beyond the books. Vishal talked about it today and touched on it, but we want to do a lot more digging there, especially with some of the new accounting reports that are going to be coming out into the software very soon. Have been asked about for many, many, many months, and they're certainly on their way. And so hopefully those will land into October, and then we'll be able to do a session on that. The following one is taxes, and then the following one is a wrap up, but then we will continue with other sessions as well. But we hope to see you there. There is a link available. The link is going to be sent out in the follow-up email, but also it's available in the chat through the actual notes package I sent. If you want to be notified of it, you can always register for it. Just know that the date and time are going to be still fluctuating a little bit depending on when we get lined up for that one, but it is coming, and that will be the next session that we dive into. And then the last slide there is just a thank you. Thank you for being here. Thank you for spending time with us. Thank you for listening to us. And we do love your feedback. So if you do have any feedback, please fill out the brief survey afterwards. We definitely look into it. It definitely turns into better iterations on how we do these so that we get more value out to our clients and prospects that are considering the software. Vishal, I'll let you kind of close things off and take it away.
Well, I really appreciate the opportunity to speak to this audience. And all I'd say is that sometimes these kind of working sessions or workshops leave you with more questions. Hello at hostallies.com. Just ping me and I'll get right back to you and we can talk about these. Because we do want to give you a more complete perspective, and sometimes it's hard to handle every case on a call like this. But looking forward to hearing from you. Hello at hostallies.com.
Thank you very much, Vishal. All right. Thanks, everybody. Bye now.